What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is how AMC could finally be the straw that breaks the camel's back in terms of our entire financial system in the United States. We have a lot of incredibly important information to cover in this video, such as these reverse repurchase agreements and a lot of these proposed rule changes and things that are going on behind the scenes that suggest there is something very wrong about our entire financial system at the current time. But first, I would like to shout out Charlie and the Vids for making an unbelievable due diligence piece on this reverse repurchase agreement situation. I'm going to link his video down in the description, and we're going to go over that actual reverse repurchase agreement situation that we have on hand briefly in this video. But the more eyes that we have on this situation, the better. The more people that we can get into this movement, the better off we are going to be in the long haul. So before we get into all of the really important information, I want to briefly cover what is going on with AMC today. So we broke $14 a share again, and we are up at the current time that I am recording about 6% on the day and trading at about $14.53. This is a very key level for AMC. A lot of people have been coming out and saying that anywhere above $14.50, if we can break this mark and stay there, is a very key technical level, then we could see a massive rally up after this. I also want to talk about there are always two sides to a different trade. There is a buyer and a seller, and people have different expectations of what is going to be happening with the trade. Now, a lot of people have been talking about the concept of diamond hands and paper hands, people either holding their position until the very last moment or selling off early. Now, in my opinion, I was thinking about this last night. The hedge funds have pretty strong diamond hands at the current time. They are continuously trying to short this stock into oblivion. Now, the only difference between them and us is that we are not, manipulating the stock, and two, we are not trading on margin. So there is nobody that can come and basically take our position away from us hypothetically. So we have the winning hand. Now, when we move over here to another Ortex update, we can see that the estimated short interest as a percentage of the free float is at about 14.55%. This is only the short interest that has been reported. So again, we've talked about this a lot. It's in the hedge funds and institutions' best interest to come out and directly lie to the regulatory institutions about the amount of shorts that they actually have. Now, we also see the utilization still incredibly high and anywhere over 75%, according to that research report by that professor at the University of Notre Dame. Anywhere over 75%, there is a 1 in 26 chance every single day that there is going to be one of those forced share recalls. Now, we've gone over that in a couple of my previous AMC updates, but let's get into this reverse repo agreement. So we first have to define exactly what this is. So a reverse repo is a short-term agreement to purchase securities in order to sell them back at a slightly higher price. Repos and reverse repos are used for short-term borrowing and lending, often overnight. Central banks use reverse repos to add money to the money supply via open market operations. So this seems like they're just pumping new money into the economy. Now, when we come over to the actual page on the Federal Reserve Bank of New York, I've actually pulled this up in one of my previous updates. And when you look at all of these different reverse repos, as we can see here, 394 billion. Coming down a little bit further, another one on May 21st, 369 billion. When you look at all of the updates that we have here, it seems as if that these really high numbers are normal. But something that Charlie pointed out in his videos, which I want to show you guys as well, is that these numbers that we are seeing in the reverse repo and the repo market are wildly abnormal. When we come over to this Excel spreadsheet, which we're just going to go over briefly, this TSY accept right here is the amount of funds that has been accepted in the reverse repurchase agreement. And this goes all the way back down to January. And these numbers are in billions. So we can see that they're really small down here. And all of a sudden they start to creep up. They creep up all the way up to the levels that we are seeing now. They started to increase in March. And that is right around the time that we started to see all of these stress tests and overall market volatility happen. And coming up here, we can see over 100 million or 100 billion almost every single day. And we are now sitting over the past couple of days, every other day that we've seen one of these repo agreements, over 300 billion. Now, why does this even matter? This is some pretty complex stuff that I know not a lot of you guys have experience with, but when we come over to this article, this explains it a lot more, and this came out yesterday. Why demand for Fed's reverse repo facility is surging again. And let's take a look at what some of the individuals mentioned in this article have to say. A key artery of global financial markets may be telling the Federal Reserve that enough is enough. Demand for an overnight funding through the Federal Reserve Bank of New York's overnight reverse repurchase program has begun to flirt with recent record highs after almost no one used it for months. Daily repo usage jumped to $394.94 billion on Monday after topping $369 billion on Friday, its highest level since the end of 2017. Now, when we come down a little bit further, this is what I want to talk about. Why are they going to the Fed? Asked Scott Skyrim, Executive Vice President in Fixed Income and Repo at Curvature Securities, of firms wanting reverse repo funding despite its dwindling returns. Either there is too much cash, which we obviously know, or not enough collateral. This is extremely important. So we've seen these different regulatory institutions come out a couple of times in the past and actually up the collateral requirements for their members. There is something brewing in our markets right now, and if our markets are teetering on the brink of collapse, a massive short squeeze in AMC, GameStop, or in any one of these other situations where we are going to have to see all of these institutions take a massive hit, this is going to be a very large problem for our overall financial markets. So these reverse repurchase agreements are not the only thing that is telling us that there is something incredibly wrong with our financial system at the current time. When we come over here, we saw this capped contingency liquidity facility test. That's a mouthful. So it's an integral part of the Fixed Income Clearing Corporation, FICC's role as a central counterparty under the Government Securities Division. So this is addressed to the netting members, which we will get into in a little bit. So increase members' awareness of the potential capital commitment should a CCLF event be declared. Assess each member's understanding of a capped contingency liquidity facility event from an operational perspective, and test members' operations capacity to process redistribution repos. This is not the only time that we have seen these repos come up in these documents. Now, I want to talk about these netting members really quick and exactly what this means. So we have seen JP Morgan and a couple of these other institutions, as we can see here. JP Morgan opened up 3 new netting accounts, and we actually had them open up an additional 14 previously to this. So this is going to be right here. These were the other 14 that JP Morgan opened up. Now, what is the purpose of these netting accounts? When we come over to Investopedia, we can see netting is a method of reducing risk in financial contracts by combining or aggregating multiple financial obligations to arrive at a net obligation amount. Netting is used to reduce settlement, credit, and other financial risks between 2 or more parties. Netting is often used in trading, where an investor can offset a position in one security or currency with another position either in the same security or a different one. The goal of netting is to offset losses. Netting is also used when a company files for bankruptcy, whereby the parties tend to net the balances owed to each other. So maybe JP Morgan and a couple of these other institutions are assuming that some of the individuals that they work with, maybe some of their clients, are going to default. This is a very bad sign for the overall markets, but in the end, it is going to be good for AMC. We also saw that it was mentioned in NSCC 005 that the actual margin requirements were getting upped from $10,000 to $250,000, as we can see here. Based on the backtesting results discussed above and the impact to members of raising the minimum required fund deposit amount to $250,000, the NSCC believes that raising it to $250K is the appropriate minimum required fund deposit amount that will minimize the financial impact to its members while maximizing risk management of activity that is guaranteed at the point of validation or comparison by the NSCC. Everything that we have discussed in this video so far is pointing to a massive event coming in the near future that is going to blow off the top of all of the fraud and the manipulation that has been going on in our financial systems. And I believe that the AMC short squeeze is going to play a pivotal role in this as well. Now, when we come over here, this is going to be one of the biggest things that I want to talk about in this video. When we see here, to prepare for the market nuke, the the DTC, ICC, and the OCC have passed rules/plans to deal with defaulting members. Now, when we come back up here, the DTC revolves around stocks, ICC revolves around default swaps, and the OCC revolves around options. If you guys remember over the past week, we saw the OCC actually need to bring in an additional $588 million as collateral. Now, we can see here that DTC 004 wind down and auction plan in effect. ICC 005 wind down and auction plan in effect. OCC 004 auction plan in effect. What these are essentially saying is that in the case of a massive wave of defaults, they are already prepared to auction off all of the different assets that any of these members have. Now, at this point, you still might be thinking, well, how does AMC play into all of this? It seems like these institutions and our government is just doing it to themselves. Well, when we think about it, the government can continuously print money as much as they want to in order to keep this system afloat. There needs to be an outside event, a black swan catalyst, in order to set off this chain of events that is going to, one, cause a massive short squeeze in AMC, and two, cause this massive wave of defaults. Now, the catalyst in the black swan event that I am thinking about is going to be this AMC short squeeze. When we come back over to the chart, we are seeing AMC at very key levels. Now, if you guys remember what I said in the beginning of this video, that the hedge funds are diamond handing their position on their shorts, but they are trading on margin because they have short positions, and it is possible that we could see some of these massive margin calls or some more of these forced share recalls that we have seen previously over the past couple of weeks. So hopefully you guys were able to understand a lot of the key points that we were able to discuss in this video, but if not, make sure you drop a comment down below. I will do my best to answer all of your questions. So that is going to be it for this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, especially with AMC at the levels that it is, and I'll see you guys in the next video.